report, the 23rd of October. Right, today I'll talk a bit about Japan's economic and monetary policy outlook. There's important things are coming up. The elections is coming up in Japan, and that actually affects a lot about for forex trading. So an overview to you all. Now, the new Japanese Prime Minister Shigeru Ishiba surprised financial markets in early October by expressing that the economy is not prepared for further interest rate hikes. Now, this statement is a marked shift from his previous stance, which he supported the Bank of Japan in winding down decades of extreme monetary stimulus. So sometimes politicians before and after, very, very different. So adding to this cautious tone, the BOJ Governor Kazuo Ueda signaled that central bank would take measures approach to further tightening, citing market instability and uncertainties in the US economy as key reasons for delaying their rate hikes. Okay, but you need to know that in the Japan inflation rate has surpassed that 2% for quite some time already. And they need to, to rein down, because they're talking about wage increases and stuff like that. They have to rein down before this thing goes out of hand, because there's always a lag factor right over here. So with regards to market reaction and interest rate projections, the unexpected cautious remarks from Ishiba and Ueda led to a decline in the yen value against the dollar. So that's the reason why you saw the dollar yen moving up recently. And it's raising concerns about BOJ's strategy for future rate increases. So according to Reuters, current polls indicate that BOJ is likely to maintain its benchmark rate at 0.25% until the end of December 2024. So this is one key point, with an expected increase to 0.5 by March 2025. So if you wait for the Fed and after the US elections, probably you have an idea how to deal with the dollar yen already. Now, pressure for immediate rate hikes this year has eased, partly due to recent recovery in the yen from a 3-decade low reached in July, reducing inflationary pressures from import costs. And what we're looking for in the upcoming BOJ meetings and election uncertainty. Now, with the BOJ's next policy meeting scheduled for October 30th to 31st, many analysts expect that central bank to refrain from further rate hikes. The general election on the October 27 adds another layer of complexity, as political outcomes may affect the government's stance towards monetary policy. So they need to be careful, we want to play with rates so near the elections. So although Prime Minister Ishiba has pledged not to interfere with BOJ's decision, his approach could shift if his Liberal Democratic Party reforms performs poorly in elections. That can change anytime. Okay. So with regards to economic outlook and challenges, since March, the BOJ has ended its negative interest rate policy and implemented another rate hike in July. Ueda indicated that BOJ plans to gradually raise interest rates to a range of 1 to 1.5% by late 2025 and early 2026, provided the economy stays in its forecasted growth trajectory. So this is one part that we need to keep in mind. And so we will know the rate, the rate of change if things change different. This is their projection. Now, the central bank aims to achieve a balance where growth is neither overheated nor excessively cool. However, the economic path forward remains challenging. This you can't run from that. Okay. So at the end of the day, BOJ is relying on higher wages from corporate pay hikes this year to support consumer spending, allow retailers to gradually increase prices. Okay. Yet global economic slowdowns could discourage Japanese manufacturers from offering similar wage increases in the coming year, putting pressure on BOJ's inflation targets. Right. Finally, the political and monetary policy interplay. Political factors could also impact the BOJ's rate decision beyond October. Ishiba's approval ratings, 50.7% according to Kyoto poll, conducted on October 1st or 7th, notably lower than the previous 3 administrations. So if he loses, he might even delay that is a possibility. This suggests a very tough electoral contest that could influence government's economic priorities. Should the ruling party experience setbacks in the lower house elections, there could be resistance to further rate hikes. Moreover, political uncertainty may persist until the upper house elections in the summer of 2025, complicating the BOJ's path to normalize interest rates. So they have, even though they have set 1 to 1.5%, really have to see how this plays. If the lower house, they do well, this ruling party really do well, then it can set the tone, no issue. If they don't, again, another thing, they say, it doesn't affect, but more or less, they do talk to each other. So for now, the October 27 elections are likely to be pivotal events that will set the tone for Japan's economic strategy moving forward. So we have, another 5 days to it. So we'll see. Okay.